Welcome back to Yahoo Finance Live. I'm Adam Shapiro, and we invite into the stream right now the chairman and CEO at Southwest Airlines, Gary Kelly, to talk about the fourth quarter as well as full year 2020 and what happens next in the airline industry, especially for Southwest. Gary, thank you for joining us.
It's my pleasure. Thanks for having us.
When we jump into the numbers, we know 2020 was a tough year. It was the first loss, essentially, for Southwest since 1972, as you pointed out. But I want to tell you something that Savi Syth over at Raymond James had to say, talking about the airline being more cautious than we've heard from others, which have already reported about the potential recovery this year. But then she said the balance sheet strength remains unmatched. And I want to point out to the people watching, you have $14.3 billion in liquidity at the end of the fourth quarter. Average daily cash burn was down to $12 million, although you expect it to go up soon to about $17 million. What makes your balance sheet so strong?
Well, this is also our 50th year. I hate to end the 49th year with a record loss for us, but even Southwest isn't immune to this pandemic. But we're very well prepared coming into this. We've got 47 consecutive years of profitability. We had very modest levels of debt coming in to the pandemic. As I recall, at the end of 2019, our debt to total capital was around 24%. And the reason that we had such a strong balance sheet is because we've had such a fantastic business model. Low cost, low fares, strong profits. We've been able to invest in growth. We've never had a furlough. We've never had a pay cut in our now almost 50-year history. So very proud of all of those things. But those kinds of strengths certainly come to bear in the worst of times like this. We had ready access to the capital markets. And at not high interest rates. So, we've maintained our balance sheet strength coming into 2021, and we're very focused on mitigating the cash losses as we work our way through this very depressed travel environment. And, this too shall pass. And when it does, we're going to be ready. We'll have the airplanes, we'll have the people. And our salvation here is to generate more traffic and generate more revenues. We cannot cut expenses to prosperity. So, there's definitely pent-up travel demand. We've got to get the pandemic behind us first. And again, when it does, we'll be ready and look forward to getting all this, all these losses behind us.
Some of your colleagues at competing airlines have set March and April as the turning point. I'm curious if you're willing to give us a point to look at as the transition, because you did say in the earnings report that, quote, travel and tourism industries face an ever-changing environment as the pandemic evolves, and there is the seasonal slowdown in the first quarter. So can you give us a date when we should see the transition?
I think the only honest answer is it's just the most uncertain of times. And we've been saying that throughout. We've heard predictions from competitors talking about break even in 2020, which turned out to be totally unrealistic. The fact of the matter is we're not in control. We just don't know the twists and turns that this pandemic will take. We're at least to the point where we know we have 2 vaccines. We're in the vaccination process. It's going slower than what was targeted, but at least we're in the vaccination process. And the case counts, which have skyrocketed here in the winter, at least they're beginning to turn over and edge down. So all encouraging signs. But I think the uncertainty that we're referring to in our release is we need the economy to open up. We need sporting events to fill up stadiums again. We need museums open. We need theme parks open. We need ski resorts at full capacity. We need dining at full capacity. All of those things will be important for people to decide that they want to take a trip. Right now, it's very heavily oriented towards leisure and the kinds of destinations that are the most popular for us are the mountains and the beaches. And the large urban areas, Chicago, Washington, D.C., New York, they're among the weaker demand areas for us. So,
Well, Gary,
all those, when we know the answers to those questions, I think we can be more certain about when travel will improve.
Is now, though, the time to somewhat expand your footprint? I know you're opening up Santa Barbara, and I think, forgive me, I think it's Fresno in California. You opened up a service in Colorado. Why do that now? Why not wait till that transition?
It's a great question. So we have a very high fixed cost business. We already have 718 airplanes. We already have 45,000 employees that are active, and the airplanes are not being fully utilized, and the employees aren't being fully utilized. So to the extent that we can add more flying, it helps absorb some of that unutilized capacity, if you will. But it only makes sense to do that if we can cover the incremental operating cost. And we can. So by adding those, we actually generate more cash than we would be generating if we were not flying these new routes. So it's a matter of breadth of our route system right now. If you can add new markets and tap into new customers and give existing customers new opportunities for travel, that's a plus. But right now there's no depth. So Dallas, Houston, one of our original markets, there's no reason to add more flights in a market like that. We're just not going to generate any more traffic here in the short term.
Two last questions for you. First, you were gracious and humble in your statement after Congress extended the payroll support program, but you also mentioned that you're still somewhat overstaffed. Is that a temporary situation, being overstaffed in areas?
Well, I certainly hope so. In other words, if we don't, the only reason that it would not be temporary is because we don't see the customer traffic return. We don't see revenues return. If we stay at these low levels, then yes, there are thousands of people that would not have enough work to do. But our belief is that as soon as the pandemic recedes, that you'll see a surge in travel demand, and we want to be there to serve them. So it's just trying to strike the right balance. If we downsize the airline, it will make it harder for us to respond when the demand comes back. And we need the demand to come back in order to break even, so it's just trying to strike that right balance. But we are definitely still very much overstaffed and definitely still underutilizing our assets. So we just need to get from here to there, and we will.
And let me wrap up with a headline that everyone's paying attention to. As a CEO, you're always looking at several variables. One of them are the shareholders. And one thing that people hate are the shorts, right? Southwest, again, want to point out the balance sheet strength remains unmatched. But one of your competitors, American Airlines, wasn't in as strong a position. And we're seeing their stock go up, and it's being attributed to this kind of GameStop phenomenon and the Reddit situation. Is this something that is actually discussed in C-suite like yours about how do you deal with a situation like that?
Yeah, well, yes and no. I think it's definitely a situation, and many have opined that it's still all about fundamentals, and when market prices diverge from fundamentals, that is problematic, and certainly raises issues that companies might need to focus on or deal with in some form or fashion. But this is 35 years for me at Southwest Airlines, and to be honest, we've never had a short problem, if you will. So we just don't have a lot of experience with that. And beyond just pontificating about it, I don't have a whole lot to add to the conversation. It is extraordinary, what's going on. But it's nothing that we're dealing with here at Southwest.
Well, Southwest celebrating 50 years of Southwest Airlines, although historically 1967, you were Air Southwest. You've come a long way. And congratulations on the Pittsburgh. You're now the largest carrier essentially in Pittsburgh. I wish it was Cleveland, one of my favorite cities, but perhaps in the future. Gary Kelly, all the best to you and the team at Southwest.
Thank you all again for having us.